Hi guys, Ram William here with your channel Let's Talk by Knowledge and the company's Gamma Accounting. Today we'll continue talking about taxes and the same thread that we've been talking about. Today I'm going to talk about the PPP, but I will have three parts of this. I will upload three different videos. The first one is the PPP for employers with employees. The second one will be the PPP for independent contractors, sole proprietors without employees. And the third thing will be the seniors that they should or should not file a tax return to receive the stimulus checks that has been assigned, and whether the money, how it comes, and when, as the IRS released a lot of information. I have 3-4 points here. I'm gonna set them up first, so whoever wants to continue until the end of the videos or not, and I really suggest you stay to the end of the video because there is a lot of information I'm gonna share with you guys here today and to see where you stand. So the first thing we're talking about, what is the PPP for whoever doesn't know what it is. The second, how to calculate the maximum loan you can have. And the third, and I think this is the most important one for you guys, is how to qualify the loan to be forgivable and you get out of this this loan without paying. The fourth part is what are the requirements, documents for to be submitted to the SBA and the lenders places. The first thing we'll talk about is what is the PPP. It's the Paycheck Protection Program. It's a program part of the stimulus plan that the Congress approved to help the U.S. economy considering COVID-19. It's $350 billion being assigned from the $2 trillion to this program. This program is only for small businesses and nonprofit. Small businesses and nonprofit that they are 500 employees or less. 500 employees or less. You cannot have more than $10 million out of this loan. So regardless of the calculation, how it works, which is later I'm going to show you the application and an Excel sheet, how you calculate all the numbers that you need to put on the application itself. But you cannot have more than $10 million per business or per application. The loan max is 2.5 times the average cost of the payroll, the average cost of the monthly payroll. 2.5 times the average cost. You can use this loan also for different things, but with some percentage. You can use it for rent, for utilities, for interest mortgage, and for qualified purchases. The qualified purchases we call in the accounting world is the essential expenses for your company. What are essential expenses? It's hard to identify it exactly because it's unique from business to business. But some stuff, for example, your business needs a cable to be there in your office and showing people. Is it essential to your business? It might is for you, but not for others. So what is very essential to you to run your business, and without it, your business might be stuck or be behind in competition. This is what is considered qualified purchase. So payroll cost, rent, utilities, qualified purchases, and mortgage interest. The application starts on April 3rd and ends on June 30th. So again, April 3rd to June 30th, they will not accept any more applications for after June 3rd. The loan terms and conditions. And I know it's forgivable loan or we're paying, just hear me for right now, and then I will explain how it's become forgivable. The loan is 2 years loan with 1% payments. As I think if yesterday or day before, it was only 0.5%. The update just came today. It's 1% tax rate, APR. Okay, I'm sorry, not tax rate, interest rate, APR. 1%, 2 years loan, and is deferred for the first 6 months. So for the first 6 months, you don't have to pay anything, whether it's forgivable or not. I mean, the non-forgivable part, you don't have to pay. And if you cannot have it qualified for forgivable or part of it to be qualified for forgiving, then you will pay the full loan at 1% in 2 years, and the first 6 months are deferred and not the payroll part has to be 75% of the total loan you're taking. So you only can use 25% of the loan for anything other than payroll. So if you have fired someone due to the circumstances we're in, or you laid off someone, you must by June 30th have those back, and you put yourself back to the same amount of payroll cost as of the one you submitted to the bank. So you will calculate your payroll for 12-month period prior February 15th, 2020. So you count 12 months before that. I suggest, and you should only calculate 2019 payroll and do the average cost, which is I'm going to show it to you in a minute. So calculate 2019, 1/1/2019 until December 31st, 2019. Calculate your average cost based on that. Some people will say, oh, I have January 2020 is much bigger than any month and I would like to include it. This is fine. You can do it. I'm suggesting only 2019 just to not get yourself in a mess. So when you come up with this number and submit it to the bank, by June 30th, when you try to qualify the loan to be forgivable, you should and you must actually be on the same number of payroll. So if it was the average cost was $100,000 that's been submitted to the bank to get the loan, then by June 60th, when you try to qualify the loan to be forgivable, you have to be at $100,000 or at $75,000 or more. If we take in the $100,000 as an example, so you're submitting your payroll cost at $100,000. Then June 30th, you must be at 75 or more. So if you laid someone off or you fired someone, you should bring them on board and use the loan for this. So 25% of the loan, if you're taking $100,000 loan total, then 25%, $25,000 will go to anything else for your not anything else for your essential qualified purchases that makes your business running: rent, utility, interest, mortgage, and other stuff that is essential. And the rest must go to the payroll. The payroll must be at least 75% of the average cost of the payroll you submitted when you got the loan. Okay, so what are the documents required for this? You will have two sets of documents. The first set is for the SBA, which is contained as follows. Application for the SBA form, it's 2483. The application form equals 2483. Again, 2483. I'm sorry, I have to read from the paper here because it was a lot of information to memorize and just say it. So 2483, and I will show it to you in a second, and I'll walk you through what is the most critical spots that you need to take care of it, because the rest of the application just matter of normal information. The second thing is all the documentation of payroll, and please focus with this. You will need all the W-2s, W-3s, the 491, the 490, and let me repeat that again. I'm sorry, again. W-2, W-2s, W-3s, 941, 940, and 944 if you are required by the IRS to file 944. Not all businesses file 944, but most businesses, they do W-2s, W-3s, 941, 940, and or the local taxes that you have to submit, such as the employment compensations. In Virginia, for example, is the VEC. How much you submit to them. Those documentations must present the period you choose. You remember we said anytime prior February 15, 2020 can calculate 12-month look back period. You calculate 12 months from that month. And I suggested to start from January 1st, 2019 until December 31st, 2019. Calculate these amounts, and that's what you submit. And you need documentations, again, W2, W3, 941, 940 to submit to with the application 2483. The third part, it might be related to you directly, but you should be aware of, which is Form 159. And this is for the third party that helping you if you choose to. And that third party, I don't know if it's required to be registered agent with them or not. That we don't know yet. So, but as I read in the Treasury, lawyers can be a third party, accountants can be, CPAs obviously, any other any others agents that involve in that field or industry could be registered agents. We don't know what the bank need to be confirmed. Yes, we accept you as a registered agent with us or not. I think this is something the third party have to take care of. But this is the form you need if you are using a third party. The last documents for the SBA is the certification by the applicants, which is the good faith. The good faith is contained a couple things that you have to submit, and I believe it's part of the application too. That it will tell you that you must provide documentations. You are not accepting any other loans with this program. You're not using the money for gambling or anything. You're not convicted, or you have any criminal record, obviously. This is very important. The last one is you will be prosecuted if any of the documents are falsified or fraud. So you guys be careful with that. You think, yeah, it's part of it, but you cannot approve or consider in this part, and you will have a problem with it. Please be aware that the lender, which is the banks, they might ask for their own documentations. I don't know if it's going to be more than what I said, but let's take a peek at it, which it could be the business start date, approof of ownership, existing bank account, profit or loss for the period you're given to them as your average cost. Here is the thing about once, because we're here with the lender part. As far as I know, the banks, they don't have the full information, and I think they don't know what's going on exactly. So when you submit the application tomorrow, you're not the only one. There are millions doing it. So don't be surprised that the banks, they have no idea what you're talking about. Don't surprise. I suspect that they know exactly what's going on. There's a lot of going on the law. It changes by the minute, to be honest. And the explanation and interpretation, it changes by the seconds. So don't be surprised and shocked what's going on. It's gonna feel like people told me in 2000 and when 1999 at 12 midnight, people were getting crazy over the changing of the 2000 and the computer technology. It's gonna feel like that, however experienced this time at the time. So don't be surprised. Don't get frantic and what's going on. Okay, let me show you guys how the calculation happens. I prepared a version of it on Excel, and this calculation, how to come up with the average cost per month for the payroll, how we calculate these amounts to submit it to the bank. So let me zoom in here and show you this. This is what I have prepared for you all. So the total gross wages for 2019, it's 150,000. And how this got calculated. So you will take the salaries of all employees that they make in $100,000 or less. So let's say if you have 3 employees that are making 150 each, then you'll take 100 from each, and your total wages will be 300,000 instead of 150. Here I'm considering my employees. One of them is making 100,000, and the other is making another 25, and the third is making 25. Then I'm making 150. I'm taking 150,000. You will see your total wages on box 5 of the W3 that is submitted to the IRS. You should have, if you have a payroll provider, they should have that for you. And then you take that number. However, again, if your employees are getting paid more than $100,000, then you will take only 100,000 for them. So in my case here, I'm using it simple, 150,000 for the total wages. Then you can also take the total health insurance cost for all employees, but by whom? Employees cost and not employer portion. So not your portion, that's their cost. Then you add it here too. And then the retirement plan, and again, it's an employee cost and not the employer portion. All right. And this is the employer portion, which is the state and local employer tax. In our case, in Virginia, it could be the VSC. In other states, is the employment commission. You add that here, and then the total, you sum all this, will become 185,000. That is all what you have for the 12-month period, like we talked about. The average would be this number divided by 12. So this number, C7 divided by 12, it would give you this average. You will take that average, this is the monthly average cost, and you multiply it by 2.5. So this average, C9, C, column C, row 9, multiplied by 2.5 times as the treasury direct us for the loans. It would give you the maximum amount of loan that you can have based on this type of expenses or costs for the payroll system that you have. Okay, so this is pretty much how to calculate it. Okay, these three numbers, be careful, because these are very important, because this is what we're gonna use for the application. And here's the application, the form 2483. The most important three parts here are we just calculated. So you will have the average monthly payroll cost, which we just got from here. The average cost is the $15,416.67. And then you will have the multiplied by 2.5 times, which we took this part, multiply 2.5, so 38.5, and this is where you add. Sorry about that. So this is where you add the amounts here. So average cost calculated, total cost divided by 12, and the equals loan amount of the maximum is the 2.5 times the average. Here, number of jobs, you will put the number of the full-time employees. There's a political thing behind this, which is all politicians will come out, hey, the plan we did is save this amount of people to have jobs or whatever. But this is not the case. But these are the three most important spots that you need to have in order for you to have this correctly. Then you will choose your nonprofit or your for-profit or what type. Very normal information, nothing crazy. You'll answer these. Are you convicted? Your business is this or that. Normal things. And then here you will add your initials on these type of stuff. Again, nothing crazy. Then it comes the signature part right here. If you have a representative different than the owner, then they will sign here. If the owner and the representative are the same ones, then also they sign these too. That's pretty much about the application and the Excel. There is nothing pretty much more than that. Now, it comes the part where when and how you qualify this loan to be forgivable. Couple things. First thing is you will have to submit all the qualified plan that you prepare within 8 weeks, 60 days from the day you receive, you get approved for the loan. Then you have 8 weeks, 60 days. You will submit this plan and tell them that's how I used it, and this is qualified based on the Treasury rules. There's a different Excel sheet we will have to prepare. I think I will prepare it later once we get over with the law and everything. I will prepare another Excel sheet to show you how you should prepare it with all the documents attached. Please, if you get approved with this loan, keep every documents, every receipt, every whatever that approves that you use that loan towards the purpose of it, which is mostly 75% of it to the payroll and 25% for the other stuff that you need, rent, interest mortgage, utilities, and the qualified purchase, which is essential for your business to be open and not run out of business. That's pretty much for this video. Let me know if you have any question. You can leave it in the comment below, or you can email me. I'm pretty open for any questions, and I will do my best to help you all If you like the video and you think it's useful, please share it to anyone else. And that's pretty much it for that. I will post another video, like I told you guys, one about the PPP for independent contractor, sole proprietor, and the seniors that should or should not file tax returns, and how the money will distribute it. And actually, this one will be very interesting. You'll be surprised how the money will be distributed to you all. All right. Thank you so much, and I will see you in different videos.